Hello friends, Emilio Espinosa with Espinosa & Associates here to give you your market update for the month of November. Great news as far as sales goes. It was nice to see that on a year-to-year that the sales were up. Not surprised though. Last year was a bit of an anomaly because I think last year a lot of people were trying to just wrap their head around some of these interest rates and the economy and etc. So the fact is, as you can see from the screen, from a year ago, we're up about just over 40% on sales. New listings are up 6.6%. Active listings were at 21,818, which is up 30% from last year. That's a very good number to note, especially given the fact that we're in the winter market. Average price is up about 2.6% from last year. So we're kind of almost comparable to last year, which again is not surprising, especially with everything that's occurred with the interest rates this year. Average listing days on market, as you can see, we're at 31 days, which is up 24% from last year. And property days on market, which is at 49 days. That means is how long it takes for that property to sell, whether they put it on the market or take it off the market, how long it's taking this year versus last year, and that's up 25.6%. Now, as we all know, the Bank of Canada reduced its overnight lending rate by 50 basis points, which means that since June until now, so at June, prior to the June adjustment, the prime rate was at 7.2%. Today, we're at 5.45%. Considerable savings, especially if you had, like, say, a mortgage of about $800,000, you're probably saving, well over $500 to $600 on a monthly, comparable to June. That is huge. That is a big weight off people's shoulders. It lightens the wallet a little bit, not considerable, but anything that can is much better than, any little bit is better than nothing. So in seeing how the market has behaved up until now, with this last adjustment, it will be interesting to see what these next couple of months, December, January, and February, what the market is going to do, what the consumer sentiment is going to be, and how reactive or responsive, really, they're going to be to this aggressive rate adjustment. The reason I say this is that when you're looking at the month-to-month changes from October to November, we see that sales were down 11.8%. New listings were down 24.4%. Active listings are down 10.9%. And average price is down about 2.6% from the month before. So it'll, to see how this behaves, and the reason is because we also have the new rules that are coming in the next couple of days, December the 15th, with regards to CMHC, where they're going to be extending that to the $1.5 million mark, where anything over 1.5 will require the 20%, and anything less, obviously, it's going to have some relief. Now, keep in mind, and I want to mention to those people watching this, if you're buying, let's say, a $1.450 million property, understand that yes, you're not going to be forced to put a 20% down. So you're going to be able to buy with less of a down payment. However, understand that the CMHC that you're going to be charged on that loan is going to be probably somewhere around $52,000, and this will get added to your mortgage. So understand that, yeah, there are changes, but it doesn't come at a cost to you. Having said that, for those of you that are looking, and again, if you're a buyer with this rate adjustment and these new rules, this really opens up the doors for you to get into home ownership or home improvement if you're currently living, like say in a condo, a semi, or a townhouse, and you want to get into that bigger home. You have a lot of choice. You're gonna have more choice, greater affordability, and flexibility when it comes to your mortgage. If you're a seller and you're eager to make a move, whether you're downsizing or again, a seller that's looking to upsize, there's gonna be some growing pains, probably not as harsh as this year was, but there's gonna be a lot more, I think, people entering the market. You're gonna have a lot more people, shoppers, looking at listings, and eventually this will translate into the pricing as well. So I know my sellers, you guys have taken a beating this year. I feel for you, but I think that those sunny days are very close and near. So stay there. And again, for some of those sellers that we obviously were selling their home and we took them off, we will be contacting you the moment we see any any reflection on pricing, so that you can get back on the market and follow through with your real estate plans. If you're an investor, there's probably a lot of opportunity in the condo sector. There's a lot of inventory in that sector, and again, the condo market continues to get beaten up. There's a lot of choices. There's a lot of new inventory that's going to be coming in the coming months. So for those of you that are looking to invest, this might be a good opportunity. And the rental market. I mean, for those of you that are looking, we've seen a little bit of the market softening a little bit. I don't see it softening more. So if you're looking at leasing or putting your property on lease, listen, have the next few weeks off, of course, spend it with family, but in the new year, don't hesitate to contact us. Sit down with us. We'll sit down with you. We're not going to give you a cookie cutter advice. That's not what we do. We're going to give you advice that's relevant to you, relevant to your situation, and relevant to your financial situation. So we'll sit down with you, put together a plan, and let you know what's happening in the market so that you can benefit. I hope this has been helpful. We'll see you soon in the new year. Happy holidays and Happy New Year to everybody. And I look forward to giving you more insights in the coming months.